From the floor of the CME Group, this is Danny Riley on today's Cash Close. The name of this video, Ukraine, the S&P, and thin to win. The high of the day in the S&P came in at 1968.80 mid-morning. The low came in at 1961.40 early in the day. At last, we're 1967 even. We're up 14.5 handles. Total volume, we have 800,000 minis traded, and we have 2.2 thousand big S&Ps traded in the pit. MOC, the MIM started showing small buys, 150 to 200 million right after 2 o'clock, and it gradually kept increasing. And I told the room that I thought it was going to be a bigger buying balance, but I didn't know that we were going to have $1 billion to buy MOC. That said, look, the S&Ps have been in slow motion today. For most of the day, for at least the last 4 hours, it's been trading in a 2-handle range. And I suspect that we're going to see a lot more of this as we go into the end of August. Tomorrow we've got the Consumer Price Index, CPI, we have the housing starts number, and we have the Redbook number. Now look, I really do think we're going to have a slow week. Not only that, there was very little there was only one economic report today. And on Friday, we have no economic reports. To me, it feels like people are trying to get a little bit of a vacation in before the end of August. Now, we always know that Mondays start out slow, but the volumes here are really, really something. We've got 800,000 minis, and that includes Globex. So that tells you, as we've always said, Mondays start out the week slow, but geez, this is extremely low volume. And like I said, I think it's kind of a precursor for what the week could be like. And then last thing I want to say is, after we made the 1890 and a quarter low, and the S&Ps rallied back up to 1935, I came out and I said that I thought that the S&P would trade 1960 before it traded back down to 1890. Now, I get the feeling the way this is set up right now, with all the short sellers ganging up on the market over the last 2 weeks, and then Friday's sell-off, all that happened here is that the shorts doubled down, and that means that the stops doubled up on the upside. Now, it's my feeling that, after I said that we'd go from, we'd see 1960 before we'd see 1930 again. Now I'm thinking that we're going to see new contract highs, either this week or early next week. But, the big thing here is that really I think is the term thin to win is going to apply here as we go into the end of the month. That a lot of folks in Europe take vacations at the end of August, and there's going to be a big hurry up to get vacation time in the U.S. before the end of the month. So that said, I think it's going to get a lot thinner as we move forward. Look, I really can't express what the stops do more than what I've tried to tell you. And I think what happens is after the S&P sells off, it builds up more buy stops, and it sells off again, then these buy stops build up again, and that's what we've been seeing today. And we saw a lot of that Friday as the S&P rose late in the day. That said, we're going to leave it like that. I'm calling for new highs. I'm not bearish, and I'm not thinking that way at all. I'll see you guys tomorrow on the opening print.